On April 2, 2025, President Trump announced new tariffs on imports. These tariffs are significant, with a 10% blanket tariff on all goods entering the United States. Additional duties target specific goods from 185 countries. These tariffs took effect on April 9th. President Trump defends the tariffs as necessary measures. He believes they will boost the American economy. However, many fear a global trade war. This is not the first time President Trump has used tariffs. He imposed tariffs on Chinese goods in 2018. These new tariffs are far more extensive. They target a broader range of countries and products. The impact on the global economy is potentially severe. The international community has condemned the tariffs. Many view them as protectionist and harmful to global trade. The tariffs have already sparked retaliation from key trading partners. The situation is fluid and tense, with experts warning of a potential global recession. The impact of the tariffs is widespread. Nearly every sector of the global economy will feel the effects. Some sectors face more immediate and severe challenges. The agricultural sector, particularly in the United States, is bracing for hardship. China, a major importer of American soybeans, has already imposed retaliatory tariffs. The technology sector is also vulnerable. Many tech giants rely on global supply chains. Tariffs disrupt these chains, increasing costs and potentially delaying production. Companies like Apple, Dell, and Meta have already seen their stock prices fall. The automotive industry is another area of concern. The tariffs make imported cars more expensive. This could hurt sales for foreign car makers in the United States. American car manufacturers, while somewhat shielded, are not immune. They rely on imported parts, which are now costlier. Luxury goods, particularly those from Europe, are facing a significant impact. A 20% tariff on European luxury brands will likely increase prices for American consumers. This could dampen demand and hurt sales for these high-end brands. The tariffs have cast a shadow of uncertainty over the global economy. Global stock markets have reacted swiftly and negatively to the tariffs. The Dow Jones Industrial Average has plummeted, reflecting investor fear and uncertainty. The S&P 500 and Nasdaq have followed suit, both experiencing significant drops. These declines signal a loss of confidence in the market. The impact extends beyond American borders. The Nikkei 225, Japan's leading stock index, has also fallen sharply. European markets are bracing for similar declines. The FTSE 100 in London, a bellwether for European markets, is expected to open lower. Emerging markets are also feeling the pressure. The Shanghai Composite Index in China has experienced significant volatility. The Pakistan Stock Exchange is not immune. While specific data is limited, the overall negative sentiment suggests a downturn. The tariffs have created a ripple effect, shaking investor confidence worldwide. The current economic climate demands caution. Investors should carefully consider their options. Diversification is key. Spreading investments across various asset classes can mitigate risk. Focusing on sectors less reliant on international trade is advisable. These sectors are less likely to be affected by tariffs. Monitoring the situation closely is crucial. Negotiations between the United States and its trading partners are ongoing. Any breakthroughs or escalations will significantly impact the markets. Staying informed is vital for making informed investment decisions. Seeking safe havens is another strategy. These are investments that tend to hold their value during times of economic uncertainty. Gold, often considered a safe haven, has seen an uptick in price. Other options include government bonds and defensive stocks, such as utilities and consumer staples. The imposition of these tariffs has created a complex and volatile situation. Investors need to tread carefully, stay informed, and seek expert advice. The road ahead is uncertain, but with prudence and careful planning,